Hey everybody, Boris, Forex. Welcome to our weekly technicals for August 13 to August 17, 2018 for the majors, for euro dollar, dollar yen, and pound dollar. And complacent no more is the theme this week. So much for the summer doldrums, so much for the August calmness, so much for everything. Turkey blew everything up last week in a major way because it wasn't just simply a crisis in the emerging market nation FX, but it had a massive spillover into majors FX, taking out long-term support in the euro dollar at 115. And I think there's more to come as far as euro dollar to the downside. We'll take a look at the charts in just a minute. But ultimately, the risk factors are far from over. We could have a little bit of reprieve, certainly some short covering movements back to the upside, but I think they're going to be very shallow at this point because for right now, there is very little on the horizon that makes you confident or at least mildly hopeful that this crisis will be resolved. Erdogan is looking at the situation essentially as a political crisis, effectively as another crusade by the West against the greater, religious Muslim, Turkish, nationalist fervor, whatever his point of view is. And of course, it's all utterly flawed at this point because to apply political solutions to economic problems is only going to exacerbate the political problems of Turkey. And that in turn could then pull capital from all other emerging market nations in combination, this is the critical thing, in combination with higher oil prices. Remember, the only thing that matters is that oil has to be paid in dollars. If your currency is collapsing and you have a need for energy and you have to pay for it in dollars, that has such a negative, deleterious effect on your current account balance, whether you are South Africa, whether you're Turkey, whether you're Indonesia, it doesn't matter. All emerging market nations come under a massive amount of threat because of this very negative dynamic. And if oil goes up while this crisis continues, it just could have a very negative effect all the way throughout the world, both for the majors as far as an export factor and also as far as credit risks. So I think we may be just starting this big cycle in FX. And it's certainly worth to look at it from a risk-off point of view, which is really where we're seeing a lot of possibilities in the FX market. Now, the calendar, actually, before we get to the calendar, let's take a look at the levels. The levels have certainly shifted to the downside. The euro especially, taking out the 1500, very big support that we've been talking about for the last, 3 months, 4 months, that's been holding, and we thought it was going to hold. The fact that it broke is now a big sign that we have 1250 as the next big support level. 1700 now really caps any kind of a rally to the upside, and it's a long way away from there at this point. Yen still hovering between this 10, 12, and to me, and this is the true, really true sign of risk-off sentiment, is if yen takes out 110. Then you can just put a fork in it, as we say in America. It is done. The risk rally is going to be very much in trouble if yen goes below 110. So watch that level. This level could certainly come under assault this week. We'll take a look at the calendar, see if there's anything that could move it around. But really, it's going to be very much contingent on how equity flows go. And if we have a 500, 600,000 point day in a Dow, that really takes us below to 110 and does a tremendous amount of damage to risk on trades. And then last but not least, here's the irony of the whole thing. Cable. Now, cable does have a little bit of data this week, but I think it's overall going to have more or less of an impact. The irony of the whole thing out of all of this, I think, is that the news this week is that the majority of UK voters, and certainly the majority of the voters in those districts that voted for Brexit, are now wanting to stay in the Union and want to vote Remain. Because as the reality of hard Brexit starts to bear on UK, people are beginning to freak out and understand that they are going to be essentially cut off. Their whole economic oxygen will be completely cut off as this tiny little island in the Northern Sea that is going to have no access to the single biggest market next door. So ironically enough, it actually pays the European Union to be as hard-nosed as possible to force the fear of hard Brexit and therefore force a revote. This is really the critical component of the whole strategy, is if we get in a situation where the conversation begins in earnest about a potential for revote, it's massively positive for pound because it means that Brexit may not happen. So ironically enough, when you're looking at the charts, cable was the least relative weak on the week, because I think the market is kind of sensing that maybe the worst is best as a potential news flow. So we'll take a look at that in a minute. Let's take a look at the charts and see how everything. Let's take a look at the calendar risk first and see how everything sets up. So we do have important UK data. We have jobless claims, employment rate. We don't have any view on this. Kathy sort of there's a mix between weakest job claims and services versus a decent growth in manufacturing. Overall, I don't think it's going to be a massively variant number, and since it's not a massive variant number, really not going to have much of an impact. Prior to that, we'll have the GDP from Germany, which will be strong, but again, this will be past data. The market will be much more forward-looking towards what's happening in the emerging market world, and that could be very negative euro as we go forward. ZOO, probably going to be bearish because we have still contraction or a fall off in factory orders and lots of manufacturing demand, which will only going to get exacerbated if we get the emerging market crisis that we seem to be starting to have now. And then we have a whole bunch of UK CPI, PPI data. Again, we have no trade because data seems to be a little bit mixed. And again, I don't think it'll be really material unless it's a huge variant to where the market comes in. Most likely, we're still going to remain on the core basis within 1920. Even 21 is not going to be a hugely different thing, because ultimately the Bank of England essentially said one and done, don't even talk to us anymore until the Brexit thing gets resolved. I think that's where we stand. The one thing that we are bearish on the UK data going forward is the UK retail sales. There's a little weaker growth there. Prior to that, though, I think the single most important major event of the week will be the retail sales in the US, in which we are mildly bullish, not super bullish, but mildly bullish on the retail sales. But here's the thing. If this turns out to be, this to me is kind of very interesting. If this turns out to be weaker, and remember, retail sales have actually disappointed many more months than they have surprised to the upside over the last 6 months. The consumer has just not been there because wage growth has not been there. So if we don't have, unless we have a massively strong upside number, the control group, I believe, is what, 5? This time we're actually looking for a big bump of 5. But if you look at, I'm looking at X auto and gas. Well, we don't have, so let's just say we use the control group as our factor. If this comes in weaker at 3, it really suggests that there is just no follow-through, no continuation to the fiscal stimulus that the U.S. has had. That could put more pressure on dollar yen as well. So that could be a countervailing force if we have very, very strong U.S. data. But I doubt that's going to be the case. So that's going to be an event we're certainly going to be watching. And then, last but not least, we have U of Michigan at the end of the week. Again, just absolutely non-event at this point. Nobody cares about investor sentiment at this point, given the fact that it's going to be very backward-leaning, given all of the EM issues. It is, as I said, going to be a risk-on, risk-off week, driven very much by headline risk, by Turkish lira risk, by equity flows, and whatever headlines the policymakers are going to be going. So I think that's how we need to be looking at the charts. And when you're looking at the charts here, one thing is very clear, is that this break is a very significant, meaningful break. This 1500 level has been a hold level since literally October of last year, right? This is a weekly chart. We broke that. When we have these kind of meaningful breaks, the other thing that's interesting when you look at it is that the next level of support doesn't come in till about 1250, somewhere around 1220. So very likely we can just go a little bit more granular here, just to show you. Very likely, and by the way, looking at dailies, we broke the 500 SMA, the long-term SMA. When we break the long-term SMA, another very, very strong signal. We broke that SMA on the Macron rally, right? This was the Macron rally that kind of carried us to a huge, huge positive rally in the euro. Now we've made a full round trip turn back down on what I would call the Turkish fiasco decline. And it's very likely, I think, we have more continuation to the downside. We certainly have 1250 as a potential next level of support for the euro. For cable, the story is negative. We certainly broke the 500 earlier. It's not like it's positive technically, but we've had 1, 2, 3, 4, 5, 6, 7 down days, which is already a signal to us that a bounce back could be due. Secondly, it doesn't have to bounce back a lot to create a relative strength trade, because all it needs to do is simply come back towards the moving average at around 130, which I think is reasonable for us to have a relative strength trade in the pound. And we'll talk about that in the crosses as a potential trade. Here's the weeklies. Not that the weeklies look any good. Technicals really certainly don't look good at this point. The one thing that is a mild modicum of support for the bulls is that this 27 is a big support area on a weekly basis. We held it. Certainly, if we can hold it for the first couple of days, that's a positive event factor in cable, and we have a reasonable chance here to trade back up towards the 28, 29. The key thing with cable is to watch the headlines and see if talk of hard Brexit starts to really reverberate through the UK press. The next talk will be of a second referendum. That's really the very, very positive news. If there's any kind of a talk of a second referendum, there will be very, very positive impact on the pound, because the market will assume that UK voters are going to reject the idea of Brexit. So that's sort of the operating assumption right now. The economic data is, of course, back story to everything else. Here's yen. And while the risk off trade is certainly not very prominent just yet on the charts, it is suggestive. And what you see here, first and foremost, on a weekly basis, is a series of failed highs. That's already a negative construct. And in many ways, this could be the week where this just starts to really, if we have a horrible week as far as global macro crisis news goes, this candle becomes kind of this candle. We go right down to the 20-period SMA, 109.50, 109, sort of a very, very sharp decline. Remember, yen is kind of notorious for doing these very, very tight range trades. And then when everything calamity hits, the moves can be just get very violent and very, very fast. To me, the downside risks are much greater than the upside risks. I don't see the squeeze up higher. I don't see kind of a kumbaya, the world is happy resolution to all of this. But it certainly can happen. Right now, you have to operate under the assumption that essentially the highs here of 1150, and if you really want to give yourself a little bit more room, the 1200 highs is where you short against. You just sort of short against this on the assumption that we're going to break, and if we break, it's going to be hard through the 110s all the way down to 109s as a risk-on trade really starts to reverberate through the FX market. So that's how the majors shape up into what used to be a nice quiet August. It could potentially now be one of the most violent and turbulent weeks we could have in a long time. Wish you guys the best luck, the best of trading. Boris, over and out.